Joe, how you doing?
Dude, I'm okay. I'm good. Just seeing all this news about potential lockdowns again in the UK, which is a bit concerning, isn't it?
Oh no, I know. They're starting up north now, right? In the UK, aren't they?
Yeah.
Oh, dude, that's really worrying.
I know. If they close my gym, I'll be gutted because I only started going again like a month ago.
Oh, mate, I know. And the thing is, they're saying that they're looking it's the full lockdown like we had before from March is unlikely to be seen. That's like the last resort. They're saying about like a partial lockdown, like maybe closing obviously all the bars and pubs. I feel sorry for those businesses, man. They're the ones that are so hard hit. All the leisure.
I know. Yeah. Taking the brunt of it, aren't they? You can't catch a break.
Mate, well, and the funny thing is the government, like, I know it's somewhat out of their control, but they, were encouraging everyone to eat out and stuff, go to all the restaurants, go to the bars.
Yeah.
And now look. Oh,
I know.
A crisis. I think obviously at the end of the day, I guess coming towards the end of, we're going towards flu seasons and numbers are spiking. They want to take precautions now. And look, hopefully that there is a vaccine by the end of the year. A vaccine, but then we won't, and then hopefully we can avoid all of this, because otherwise, how are we supposed to live? How's everyone supposed to live our lives?
Oh, dude, I don't know. I mean, I think one of the things that worries me is like once they'll get the vaccine soon, hopefully, but how long is it going to take to get it out to the population? Do you know what I mean?
I do know what you mean.
I mean, also, they'll target the at-risk people first. Obviously, makes sense, but yeah, it might take months.
Let me just say something quickly, just before we move on to market stuff, yeah? Actually, this is going to take us into the markets in a moment. But, man, the way in which the whole world, all these leading pharmaceuticals companies is rushing to try and get a vaccine out, right? There's pressure. We saw what happened. I know, look, it may have been a minor thing, whatever, but they're trying to get this done and there can be complications. And I don't care if, all right, look, we had one with this AstraZeneca, a potential complication, right? That's why they were halted initially, their trials. But dude, cars get tested, thoroughly tested, right? Cars get tested and then they recall cars. They recall sorts of products. You can't recall something once it's in someone's system.
So true.
Mate,
right, dude. It is worrying.
That's the worrying thing, man. This is like something that we haven't dealt with before. We're rushing. And like, because I was talking to my dad about it a couple of weeks ago, and he's like, he's not going to waste time to go and get it. And I'm like, Dad, man, give it some time at least. As soon as it's out on the market, don't, please. Just don't.
Yeah. Give it a couple of weeks.
Yeah,
exactly.
Yeah. So anyway, on that front, that was, AstraZeneca, that was on Sunday, wasn't it? So was on the weekend. And then markets, if you look, like stocks, for example, and like everything other than dollar, all the riskier currencies were bid, weren't they, from the open?
Yeah.
On that?
Yeah, seem to like it, to be honest. Yeah. It's almost like stocks and stuff had been struggling quite a lot recently. So now a bit of a respite, basically, a bit of profit taking potentially on those shorts or people buying the dip now mentality with stocks.
Yeah, exactly. Let me share my screen. Let's just bring up some of the charts here.
Can
you see my screen now, dude?
It's just a black screen at the minute.
Oh, that's not cool. All right, let me try again. Share screen. Switch screen.
Nah.
One moment, 1 minute.
Okay.
Switch. Okay, can you see the chart now?
Nope, unfortunately not.
What can you see?
It's all good.
Ah, sod it.
Just a black screen.
Okay, sod it then. All I was going to have a look at, see what, I could still have a look here anyway, but let's see what US 30's been doing. It's looking at Dow Jones. I mean, really, this week, if we look at the indices, wow, we're up a little bit. We're up marginally. I'm still keeping an eye on this sort of these all-time high areas for like Dow and the German 30, the DAX. There's a lot of top areas that we're trying to hit. Dude, what do you think is going to happen with stocks? What's your view?
My view is like over the next, I don't really have a short-term view, to be honest. I think we're going to be cautious into the US election. But over the next couple of years, we'll probably just keep grinding higher, I think. I can't really see anything that would cause a massive sell-off, because the main thing pumping stocks at the minute is the Fed, and the Fed aren't going to withdraw support. So,
True. True.
Yeah, I'm bullish still, but over the long term.
Yeah. Can you see my screen now, by the way?
Nah, still black.
All right, sorry. I thought I'd try one more time. But yeah, all right. And obviously this week, why you've just mentioned, obviously Fed markets, okay, from Sunday up until like Tuesday, we were very much like the riskier currencies were initially outperforming the dollar. We started to see on sort of heading into the FOMC on Wednesday morning, I think, or late Tuesday, started seeing some flows coming into dollar. And then obviously we had the FOMC. The FOMC, Jerome Powell pretty much delivering everything, right? Everything that he sort of geared the markets towards back at Jackson Hole, didn't he? And, you know, dollar bulls sort of jumped initially just because it was all priced in, essentially, right? Yeah.
I think it was almost like people potentially, they were holding on to to deliver a surprise, and then they were going to get further gains, and then maybe when that didn't happen, they thought, okay, we have been wanting to take profit. So it was just, to be honest, because like we're saying, the Fed didn't do anything hawkish, did they?
No, not at all.
To provoke that spike. It would have been position adjustment. That's what I think anyway. And actually, like looking at dollar today, we've pretty much completely unwound all those gains now anyway.
Oh, yeah. So. Yeah, we did. We started coming on some heavy selling pressure during, obviously, yesterday on Thursday. But like, we're really, I'm just, I know you can't see my chart, but we've been speaking about this sort of the last couple of weeks where I was showing you this structure where we're printing sort of lower highs and lower lows and we're moving in this descending channel structure. We essentially broke out of that and we retested and we're just finding support still right to this day. Right now as I'm speaking, despite yesterday's bearish close, we're holding around this key area for the Dixie, just retesting that structure I explained. So, like, the thing is, the bulls from here have a lot of room, in my view, to just carry on to the upside. It's just markets are battling. I think right now, I was just saying to the members, like, right now, it's a very tricky time. Like, we're juggling a lot of things. You know, we're getting, you know, are we seeing a strong economic rebound from the United States? We're seeing one across elsewhere. We've got elections coming up. Like, who's being more dovish at the moment? Are the ECB? Are the Bank of England? Are the Fed? It's like, man, what? Like, it's a tricky one, isn't it? Really?
Yeah, like back in July and June and even August, a lot of it was coinciding together, wasn't it? To be dollar bearish.
Exactly.
But now, like you say, things are so much more mixed. Although, yeah, I don't know, things are so mixed, aren't they? Because, like you say, Chinese economy doing well, better than expected. So that's a downward force on the dollar. But then European data has been disappointing. European COVID cases on the rise.
Yep.
ECB, a bit more hawkish. But then at the same time, how long are they going to be able to hold on to that?
But, dude, quickly. That's some members. You know, like, literally since that rate decision, I've seen many members, ECB members, stressing that they're ready to act and do more. And they keep an eye on exchange rate and inflation. Like, you know, I think, as you said before, last week or whenever it was, it's clearly split there because these other members, all I've seen is these ECB members just making it clear that, you know, we are still prepared to do something. So, yeah, I think it's a split. Probably the Germans, the Dutch and stuff that are more hawkish, maybe. I don't know. Ah,
yeah,
Joe!
I lost you there. But
Oh! Are you there, dude?
Dude, I'm back. Can you see me?
I was just basically saying how the ECB is split. Essentially, they're split.
Yeah, no, I completely agree. So that should be interesting going forward to see which sort of side. What's going on there? Sorry, someone's calling me.
No worries. Yeah.
Sorry, dude.
Oh, dude, we're in the middle of the podcast.
Yeah, no, I know. No. Someone just called me, and then what it does is it cancels my recording. Boom, we're back on.
Are you sure we're live?
Yeah, is that right? Do you reckon Dan can just edit that quickly?
Yeah, I mean, yeah, it's all good. Let's just carry on.
Sorry.
Okay, so yeah, ECB split. Oh man, the thing is, if we look at euro dollar as well, we've been narrowing, like we've been ranging from sort of 117, you know, at a push down to low, the very top member, which was very, very short-lived, up at 120. So this 300 pip range, we've been seeing it since the back end of July. It's a long time. And like, it's just narrowing. We're now narrowing over the last couple of weeks. We're narrowing very tops 119 and the lows down to sort of 117.50. So now it's like 150 pip range. It's narrowing. It's subject to a breakout. It's just, what way are we going to go?
Or maybe we'll stay in this range ahead of key risks like the election and stuff.
Oh, mate, I hope we don't. It's 6 weeks away still, man.
I know, that'd be boring. That'd be so boring.
Oh, it'd be awful, my dudes. Absolutely awful. What's else happened to the market? Let's talk about, obviously, I'm going to bring up the GBP chart. Obviously, GBP had its worst week last week. GU and GJ, we lost like around 400 to 500 pips. Absolutely smashed, battered. Sorry. I was thinking about Boris Johnson there. And so it's absolutely annihilated GBP. And like this week we've been recovering. I think a bit of a technical correction was needed. That move was just so heavy, but then the markets were pricing in the worst case. But I guess a bit of realisation, perhaps there's some dirty tactics, some stupid, irresponsible tactics from Boris Johnson and his team. But then you picked up something yesterday, wasn't it? European president, what was she saying? Quite upbeat there.
Yeah. So we saw a rally. Basically, the Financial Times did an interview with von der Leyen, and she said, and I quote, "I am convinced that we can still get a deal."
Okay.
So that, to be honest, I would have expected her to say that, but markets reacted to it, and we saw that massive rally. And yesterday, GBP then completely unwound all of the selling we had seen earlier on in the day to do with the Bank of England.
That's true. Yeah, so on the Bank of England point, obviously GP was hit quite hard because even though they've said it before, that is in their thought process, but, markets reacted this time, negative rates. Oh, crap. Maybe they could take negative rates because there's more risks now to the UK economy. Obviously, we've been dealing with the COVID cases that are spiking again. We've got Brexit. We've got the furlough scheme that's unwinding next month. There's so many risks to the UK economy. So markets are like, damn, maybe they are really going to look at negative rates.
Yeah. I think the killer blow for negative rates, I think they're probably going to happen anyway. But if there is a no-deal Brexit, it will be early next year that we get negative rates. Whereas if there's not, they might hold out completely and not do them, or they might wait until maybe summer next year.
Yeah, well, on that point, dude, just when you're saying about early next year, the futures, if you look at the futures markets, they're pricing in February 2021. Okay,
yeah.
That was changed from March 2021, so it's been brought forward a month. The bets.
Yeah. Do you think in some ways that is the market almost also predicting that there's going to be a no deal? In a way.
Yeah, I think I think it's being priced in. They're pricing it in.
Yeah.
So yeah. I mean, I think the markets will still get hit hard though, wouldn't they? No, I think I've lost Joel again. Joel, come back. Joel, are you there? Are you there?
I'm back.
Oh, he's back. He's back, guys. Back in the room. All right. So
dude.
he's fine. You need to get your internet sorted, sir. What is it you're using? What is it? What service? Name and shame.
No, it should be Sky though.
Oh, what's his name? Rupert.
Sell Sky.
No, what's his name? Rupert Murdoch.
Oh, is it Murdoch?
You're in trouble.
Yeah,
Rupert.
He is in trouble.
All right, yeah, don't worry. But I was just talking about, man, you made me forget it, Rupert. What was I talking about?
GBP, Bank of England, negative rates.
Yeah, negative rates. Yeah, so anyway, maybe markets are pricing in, but, even if it happens, it's still going to be bad. Dude, quick question for you. What's your view on negative rates as a consumer? What's your view?
You mean for me personally?
Yeah.
I mean, obviously, it's not nice, like, paying the bank to have money in the bank, which is a bit weird and annoying. But, personally, I invest some of my money in stocks and stuff anyway, so I'm not really that exposed to it. But a lot of people don't know how to do that. They just have, all of their savings sat in the bank. So they're just going to be losing money. It's not good for them.
It's true. Exactly. No, agreed. Yeah, it's definitely when that time comes, even now, because inflation's eating into your savings anyway. Obviously, don't take this as advice, anyone listening, but it's trying to look where you're going to get the best return, the best yield on your money, and it's definitely not in your bank account, in a normal bank account.
Nope.
I'd even say, if people don't have a clue about where specifically to invest their money in terms of the stocks, look at a stocks and shares ISA. There's plenty of companies that do them out there without naming them all, but there's plenty that will sort of do that for you,
Yeah, and you get those nice tax breaks, don't you?
Yeah, exactly. Exactly. There was one last thing I wanted to talk to you about this week. I believe that might actually be it, my dudes.
Yeah.
Yeah, I think that's it.
It was basically central bank action.
Yeah.
Wasn't it, really?
Yeah, that was it. Next week, I'll obviously just taking a look at the week ahead. We have a rate decision from the RBNZ. They've been, over the last couple of months, really positioning the markets that they're going to do something. But expectations that they're going to hold rates, actually, at 0.25%, I believe it is.
Yeah, I think the thing is they're not going to do negative rates until next year because they need to prepare the banking system and stuff.
Right.
So,
That makes sense. Okay, I see. So maybe NZD can carry on. Okay, cool. And then we've also got, manufacturing PMIs from Eurozone. So Euro, that's going to be huge. Yeah. Huge. Let's see what happens there. But yeah, other than that, dude, that's pretty much it. Anything you want to add?
Yeah. A couple of, I think Governor Bailey of the Bank of England speaking. So if he says anything on negative rates, that could be interesting.
Yeah, and Powell speaking twice as well. What is it? It's a testimony.
Yeah,
is it to Congress or something?
Yeah,
something like that. Yeah. Okay. Yeah. So we'll see what he says. And then, dude, that's pretty much it. Well, you got much planned for the weekend?
I've got a mate's birthday, and for the first time ever, dude, I'm doing a bottomless brunch.
Oh, so, naughty at the Ned. At the Ned.
I don't know actually. No, I don't think it is. It's in Shoreditch.
Not. Oh, that would be quite nice. Is it prosecco? Prosecco?
I think so. Yeah. Limitless.
That'd be nice.
What about you, dude?
Oh, mate, you're always up to exciting things on the weekend.
Nah, I'm not. It's just like, been like the last 4 or 5 weeks I've been doing a lot, but usually it's nothing.
Yeah. No, nothing this weekend. We're I just got quite one, and then football. Next weekend we've got a big one. It's Daniel's birthday. So we're going out. Obviously, you're more than welcome to come, dude. I don't know what your plans are, but you're more than welcome to come. Actually, you might not be able to come. Sorry, 6 people now. We can't. We can't.
Oh, yeah.
Yeah, I forgot about that.
Yeah.
But so got that, and then we're actually going to because Dan and I want to sort of plan Q4, have a big Q4. We're going to Lake Como in sort of about 8 days or so, 8-9 days, Italy. Yeah.
Oh, nice.
Yeah,
it's beautiful down there, isn't it?
Yeah, it's stunning, my dudes. Yeah, so we're just gonna have a good time to map out our Q4 and stuff, and that's pretty much it, man.
Nice, dude.
Yeah,
nice.
dude. Cool. All right, bro. Good speaking again. Stay lit, baby.
Good speaking, dude.
Let's get it.